not a new floor. In fact, you would imagine that Coinbase would be gaining value because FTX, one of its biggest competitors, is no longer in business. Plus, one of the things that everybody is claiming is that we need regulation. Of course, we need it like a hole in the head, but everybody says we need to have more regulation in crypto, and Coinbase is regulated. Coinbase is a publicly traded company in the U.S., regulated by the SEC, so it should be the new favorite to win from the FTX demise because it has what everybody claims we want. It's regulated, so investors don't have to worry because you've got the government's good housekeeping seal of approval. But instead of benefiting from the collapse of a major competitor and the fact that it is regulated, it is suffering too. In fact, one of the people who is pounding the table the hardest for more regulation in crypto is Kevin O'Leary. And one of the things that's really bothering me about Mr. Wonderful is that he's acting as if he lost money on FTX because he lost $15 million. Well, what Kevin O'Leary doesn't like to acknowledge is the fact that the money he lost was the money he was paid by Sam Bankman-Fried to pump FTX. Yes, he took the money that he was paid and used it to buy FTX tokens and to invest in FTX, the company. Now, one solution that the Japanese have that we don't, and it doesn't solve the whole problem, but it's a start, is they could sell their 1.3 trillion of U.S. treasuries. Because if they did that, then they could take the dollars they get, sell them, get Japanese yen. That'll push up the value of the yen, which will help bring down prices, especially for imports. Then the Japanese government could take those yen and buy back JGBs from the Bank of Japan, basically retire that debt. And then the Bank of Japan takes that money out of circulation. And so the Japanese money supply shrinks and 13% of the Japanese national debt gets eliminated. Now that would fight inflation. And that would come at low political costs in Japan because instead of asking the Japanese to pay to fight inflation, they would be asking Americans. Because one of the reasons that the Japanese own so many U.S. treasuries is because they wanted to prop up the dollar. They didn't want the yen to get too strong because they wanted to maintain their exports to the United States. Well, we've just had a huge crash in the value of the yen. They need a stronger yen if they want lower inflation. So what they need to do is take our inflation that they imported and export it back to the United States. So the problem, of course, for America is that this solution for Japan just makes our problem even worse. Now, are they going to rush out and sell all of their 1.3 trillion in treasuries right away? No, but they're not going to buy any more. That's for damn sure. And I think they're already selling. And I think they're going to pick up the pace of selling treasuries because it is the most politically viable way to begin the inflation fight. Now, I don't know that they can win the fight just by selling U.S. treasuries, but it's the best way that they can start. And they can't win a fight unless they get in the ring. And the best way to do that is, again, selling dollars, selling treasuries. But when Japan throws that punch, it's the U.S. economy that gets knocked out. But even before Japan becomes a significant seller of U.S. treasuries, he buys businesses that he thinks will survive forever, earn money forever, and pay dividends forever. Bitcoin doesn't earn anything and doesn't pay anything. It's not the type of asset that Warren Buffett would hold forever. In fact, Warren Buffett himself refers to Bitcoin as rat poison. So it makes no sense for Max Keiser to invoke the name of Warren Buffett as he is pumping Bitcoin. In fact, one of the other lies I heard Max Keiser tell about Bitcoin was the economic boom that is supposedly going on in El Salvador because they were smart enough to make Bitcoin legal tender. El Salvador is suffering dramatically. The losses are huge as a result of this blunder into Bitcoin. But not only is Max Keiser in denial of this reality, but in his mind, he has actually concocted an alternative reality in which El Salvador is thriving. Monday night's pivot to allow the yield on the 10-year JGB to rise indicates that the Bank of Japan has now joined the tightening party having been the last holdout from that party. And this is going to further complicate the U.S. stock market and the U.S. bond market because Japanese liquidity, which has been helping to prop up global markets, is now being withdrawn, and any assets that have been floating on that liquidity are going to sink. Imagine the ramifications politically of trying to avoid that. You're talking about massive tax increases on the Japanese or massive cuts to government spending. Now, the Japanese are actually wealthy enough to afford it. That's one of the big differences between Japan and the United States, is the Japanese can afford to pay higher taxes. We can't. But just because they can afford to pay higher taxes doesn't mean they want to. But they would not be in this predicament but for the asinine policies of Abenomics and this pursuit of this 2% inflation. And I warned all along that there's no way to fine-tune it. And just because you're trying to hit 2% doesn't mean you're not going to overshoot. In fact, I forecast that they would overshoot, and then it would be almost impossible to bring the rate back down. In fact, if you remember the rhetoric that was coming out of the Fed and Jerome Powell back in the early days when he became Fed chair, and it was pretty obvious that inflation was starting to pick up, yet he's kept rates at zero and continued quantitative easing. Powell's justification for keeping the monetary pedal to the metal, even when it looked like we could have a potential inflation problem, was that if we ended up with an inflation problem, according to Powell, it was a good problem to have. Because Powell said that unlike low inflation, which has been very difficult to overcome, we know how to deal with high inflation. We have the tools. All we have to do is raise interest rates and we can reduce high inflation. So high inflation would be a good problem to have because it's eluded us for so long. We've really tried hard to get to 2%, and we haven't been able to get there. So if we get to 2.25, 2.5, fantastic. We'll just dial it right back down to 2%, no problem. That's what he was saying. What I said was that when inflation gets to 2.25, 2.5, there's going to be no way to stop it. It's going to go to 3, 3.5, 4, 5, and higher. And that is exactly what happened. But he wasn't investing his own money. He was gambling with the house's money. Or more correctly, he was gambling with the money that Sam Bankman-Fried stole from his customers and gave to Kevin O'Leary to promote FTX. Now, according to Kevin O'Leary, he didn't even invest the entire $15 million that he got from Sam Bankman-Fried. He only invested about $10 million, so he was able to keep $5 million, but he ended up having to pay that in commissions and taxes on the $15 million of income that he earned to be a promoter of FTX. But for him to be going out there now and pretending that he actually lost money, he lost nothing other than his reputation. But other people did lose real money. They weren't paid by Sam Bankman-Fried, and these people are a lot less wealthy than Kevin O'Leary. They took their hard-earned money and put it on the FTX platform, and they lost it, in part because of Kevin O'Leary. It's possible that some of the people who lost actual money in FTX, the reason they chose to open up an account at FTX and deposit their money or their crypto there was because of Kevin O'Leary's endorsement. So rather than pretending to be one of the victims of this scam, he should acknowledge his own culpability in helping to perpetuate the scam. Whether he knew it was a scam or not, he was paid to promote a scam, and that was probably one of the reasons he didn't do all the due diligence that he should have. And I think he should have been more forthright when he was publicly talking about how great Sam Bankman-Fried and FTX were. He should have disclosed that he was paid $15 million to express that opinion. Also, despite the collapse going on in crypto and Coinbase hitting a new record low, hardcore Bitcoin fanatics remain as enthusiastic as ever. I was listening to this interview with Max Kaiser, who had predicted that Bitcoin would finish the year above 200,000, yet he has not tempered his enthusiasm one bit, nor acknowledged his mistake. Looking at Bitcoin in December, trading at around 17,000, no, as far as he's concerned, nothing bad has happened. Bitcoin is as strong as ever. In fact, he was scolding anybody who is complaining about their Bitcoin losses by saying they're just speculators, they're not investors. He said, if you don't have at least a 4-year time horizon, you have no business in Bitcoin, you should just take your money to a casino and gamble. Well, Max Kaiser doesn't know the difference between investing and speculating, because buying Bitcoin has never been an investment. It's always been a speculation. There is no return on Bitcoin. You are simply gambling on price appreciation. And now he claims that Bitcoin gamblers were in fact investors and they should just hold for the long term, like Warren Buffett, whose time horizon is forever. The difference is Warren Buffett buys income producing assets.